Think of it this way. You don't want cash because, um, and I don't think you want bonds, because you get no interest rate. You get a negative real rate, so you get taxed at that negative real rate. And then, so from a holding point of view, it's got no return. And then the central bank's going to print plenty more of it and produce its supply. So there's a move to what is a storehold of wealth. Think about it, like all of us. What is a good storehold of wealth? And if you look at history through times, it's basically almost the reciprocal of the value of money. And we see that from financing. When you think a company or an individual thinks I could borrow money at this level and I can lend it at that level, or I could buy my stock back at that level, you see that kind of movement. And so through history sees that there are different storeholds of wealth that are basically almost the mirror image or the reciprocal of the value of money. And so that storehold of wealth is equities. In other words, if you were to think about certain types of equities that are not, let's say, economically sensitive, but if you just buy a company and so on, and you think it's the reciprocal of that, and you think that and you realize that they have to put liquidity in the system, then it's equities, it's gold, it is what is the thing that is the reciprocal of the value of money that you have to hold your wealth in. And so that's what we're seeing. And you see it, you've seen it through history you can go to the dates it's happened.